Remember back in 2021 when Mohnish Pabrai had a 14 to 15% position in Alibaba? Guys, I honestly think he should get back into Alibaba. I'm going to explain why. He talks about value investing in his new video. I think in today's market is the perfect opportunity to get back into Alibaba, as you can kind of see the China market is kind of calming down. It's ready for re-acceleration. And you can look at Mohnish Pabrai's whole portfolio with all these coal companies. He's getting into these companies because they're buying back a lot of shares and they have high free cash flow yields. Guys, this is the same setup for Alibaba. Alibaba's share repurchases have tripled in the last 3 quarters. They spent around $5.8 billion. So they're reducing their share count by a lot. And I think this is going to continue throughout the year. The CEO is coming out and talking about how he wants to return a lot of money to shareholders through buybacks and dividends. So this is a huge setup for the future. So Mohnish Pabrai did an interview with the University of Nebraska, and he talks about value investing because one of the questions was basically asking about value investing and where does he see it in the future.
But there's also a trend that more people are doing passive investment, invest in index fund. So there's this concern that the population of value investors are shrinking, like index fund don't pick up those undervalued stocks. Like if you are under $1 billion, it's hardly to get noticed. So in the past, the mechanism is that, value investors like you guys, you observe there is an undervalued stock, and people started investing in it and bring up the price of the stock. But the population of value investors are shrinking, and it seems it impacted that mechanism. So what's your thoughts on that?
I think it's really good when people ignore stocks. That's really awesome. I mean, I would love for the console price to stay extremely low for a very long period of time. In fact, it's not good if it goes up. They would buy shares back at high prices.
So as you just heard, that Mohnish Pabrai wishes that console's actual price stays the same, around $100, so they can buy back more shares. What does this remind you of? This is like Alibaba 2.0. They are buying back so many shares. If they continue buying back the same amount of shares throughout the whole year, they can reduce the share count around like 10%. That's incredible for a big company like Alibaba. 10% reduction in the share count, that's insane. Look at this chart right here. In their latest report, Alibaba announced they repurchased another $5.8 billion worth of shares in Q2. Over a period of 3 years, Baba has been able to reduce its shares outstanding by close to 14%. This is crazy, and you can see the results from 2.7 million all the way down to 2.3 million shares. So you can see the acceleration of Alibaba's buybacks. If they can continue on this pace, they're gonna be able to reduce their share count by like 20%, 30%, 40% in 5 to 6 years. And don't count them out, because we want the share price to remain the same, because they're going to keep generating more free cash flow, have a high return on equity. They're going to be able to monetize more. The cloud growth is going to be stable and growing. So why are we worried about the share price increasing? We don't have to worry about that. Alibaba is doing its thing, buying its stock at cheap prices.
In general, if you have identified a business which is undervalued and no one agrees with you and it remains undervalued, at the end of the day, that business is producing cash flows. And you have a claim on those cash flows. And if the business is prudent about how it's, either using or distributing those cash flows, at the end of the day, the market is a weighing machine. Those cash flows have to show up as dividends or value to the investor. So I would say it is a blessing for investors that all the money goes into the Fab Four. That's awesome. Put it all there. It's great.
So as you can see, Mohnish Pabrai is hoping more people buy into the big companies like Tesla, Microsoft, Facebook, Amazon, because guess what's happening to the market? All the cheap companies are just getting cheaper. So that's allowing companies to just buy back more stock, actually pay a higher dividend. And we can see that with Alibaba, as they're increasing, as they're giving out a special dividend, and people already got their special dividend, they're going to be able to reduce their share count hopefully by 10% this year. plus the dividend around 2 to 3%, plus the special dividend. So you're getting like a 14% return if we just hold the company. That's without doing nothing. That's with no growth, even though we know Alibaba is growing. So we have to continue to hope that these prices kind of remain the same. So Alibaba just does its thing, keep generating free cash flow, because at the end of the day, the stock market is going to be a weighing machine. It has to weigh the company eventually. We don't know if it's going to be 2 years, 3 years, 4 years. We don't know when, but we can just know that eventually Alibaba's share price will reach the intrinsic value of what Alibaba is truly worth. But anyways, guys, that's it for the video. Guys, like and comment down below. Peace.